Airbnb is a new industry company that rents private residences out to people that want to travel in the United States as well as other parts of the world. Airbnbs are really popular in Paris right now for the Olympics, as well as they've expanded into experiences where they have celebrities who will host somebody for an experience. They also have these really special places where you can stay. For example, the Ferrari Museum. It's quite expensive, but it's pretty unique. They also have the Barbie house, somebody who created a Barbie replica of her home or the little toy home built where you can stay in a house that is a replica of that experience. That's pretty neat. Overall, I've been a fan of the company for some time. I've been an Airbnb customer. I owned a couple of assets, a couple of real estate properties that I put on Airbnb and operated them on Airbnb. So I have some insight into the company and how lucrative it is for a property owner. Overall, I really like that the business has an addressable market that is almost limitless. You think about how many homes are around the world and how many communities can open up a bed and breakfast, a spare room, a full house to rent out to a vacationer, somebody who's traveling. And some of the travel that is really popular is to go to really remote places, places that are small towns, small villages, unique experiences versus the really commercialized destinations that say like a Disneyland park, very crowded, very typical, but maybe you can travel to a small town and really have a unique experience. A lot of people like that, including myself. So let's get into Airbnb. They announced their earnings and the stock is down big time. It's funny how the market will discount these special companies. And I'd like to go over that. I'll take a look at their earnings and see what they announced and see how I value the company based on their free cash flows as well as their earnings per share. I'll establish a value that I think the company is worth and compare it to the current stock price. I am currently an owner of Airbnb stock. I have a big position of Airbnb stock and I continue to add to it. And at the conclusion of this video, I'll share with you whether I'm going to buy, hold, or sell Airbnb. Now let's talk fundamentals about Airbnb. So the company is $84 billion in market cap. That will soon be about 16% less than that amount because the market is selling off. The revenue of the company is $10 billion. Keep in mind, these guys didn't really exist 15 years ago. Now they're a $10 billion company. That's amazing. Their net income, $5 billion. Amazing. Their current PE is just 17.35 for a growing business in a very exciting space of home sharing. So I think that's pretty attractive. Analysts say it's a hold, but it's discounted. That's interesting. I think analysts are afraid of the recession coming, and that will certainly affect travel. But I would venture to guess that, yeah, it'll affect especially really expensive travel, but maybe the type of travel that a family can go to a nearby town, a mountain resort, a beach, and really have a nice vacation on a budget. That is the Airbnb model, is you can really save money on your vacations if you stay at an Airbnb. So we'll see how that plays out. Overall, the company's done really well from a revenue growth perspective. Over the last 3 years, they've grown really nicely. And even in the quarterly, they grow real well. And their earnings that you'll see, they grew their revenue consistently in the most current quarter as well. What's really impressive and valuable about Airbnb is their ability to generate free cash flow. If you watch my channel, you know that free cash flow is king on my channel. And if you look at, I think I'm looking at the quarterly, so I'm going to change that to the annual. And free cash flow, trailing 12 months, $4.2 billion of free cash flow. This is a growing business in a new category, a brand new, we didn't home share to this scale 20 years ago. This is a brand new area. It was created because now we have connected world where everybody has internet. So they're able to connect homeowners with travelers. It's a good connection. They have a great experience on their website. And it's a way for a company, Airbnb, to create all these rentals without ever having to buy one property, without ever having to remodel one kitchen, one bathroom in these properties. It's very lucrative and it shows up in this free cash flow. The most valuable companies on the stock market produce high amounts of free cash flow. Airbnb is growing, becoming bigger, becoming more valuable. At the same time, the stock price is coming down. Who's wrong? The stock market or the fundamentals? Well, fundamentals are fundamentals. So I'm going to compare those fundamentals against their current stock price and see what kind of discount is available on Airbnb. In addition to free cash flow, I look at earnings per share. And the earnings per share on Airbnb are expected to be $4.64 for 2024, and good growth on that earnings per share in the mid-teens. And then in 2028, it should grow quite substantially. So really good growth on earnings per share. I'll use that as a valuation method as well. How desirable do I believe the Airbnb business is? Well, I really like buying businesses that are in the green quadrant. And to be in the green quadrant, a business must have really strong barriers to keep competitors out. You keep competitors out of your marketplace, you can really grow your revenue, have great margins, and produce great free cash flow. Businesses that are in the green, they're the most valuable businesses on the stock market. With regards to Airbnb, they are most definitely in the green. And here's why I feel that way. First, they are the number one brand in home sharing. People, especially in the US, that's the default where they would go look for a home that they want to rent out for a weekend, a week. And they're using that comfort level when they travel abroad to Europe, Latin America, Asia. So the growth is just really, really fast. Again, Airbnb doesn't have to buy one property to continue to grow. It's unlike, let's say, Marriott. They want to grow in a city, a hotel has to be built, or a hotel has to be procured, or they have to partner with a hotel owner and then put them on the Marriott network. With Airbnb, homeowners can very easily put their homes on Airbnb and begin to rent them out to travelers. Airbnb is a unique business, and you can see it in their cash flow and profitability. The reason they cash flow and they have high profit is because they're the most desired website on the internet for home sharing. Nobody's been able to replicate their model. Their competitors tend to be companies that have part of them being old school legacy businesses that were more like travel agencies, like the Travelocities, the Expedias, and those businesses are somewhat replicated and are not very unique. Where Airbnb really is just home sharing, as well as now providing experiences, very unique experiences. And they have not deviated from that and really mixed into old businesses that aren't as profitable. And they're not like a hotel franchise. Hotel franchises, again, they have limited growth because they're only going to grow as much as their footprint of hotel rooms. Where Airbnb can grow into a country by just going into that country and having homeowners put their properties on Airbnb. It's super lucrative for Airbnb. That network and that ability to really attract travelers and attract homeowners because they can make money on Airbnb, that is the model that I really like. I also own Uber, which is a lot like Airbnb. So I put Airbnb squarely in the green and away from the gray zones where gray zone companies are good, but they do have a lot of competition. They make good profits if they operate well, but I have to get a substantial discount to operate in the gray. In the red, I like to stay away from companies in the red. Companies in the red means that they have a lot of competition. That competition drives down price. When you drive down price, you drive down profit, you drive down free cash flow. All those things are bad outcomes for the businesses. So I try to stay away from the red. It's great to see Airbnb is in the green. So I did some analysis and valued Airbnb based on their free cash flows as well as their earnings per share. And I arrived at a really big discount of 66%. That's a big discount on a very popular stock. How did we get here? Well, first, their free cash flows are excellent. And if you look at their cash flow forecast that I've put together, it's very reasonable. They may even do better than this, but I'm going to go conservative. The growth rate is going to be 10% on that forecast. And again, they can grow much faster than that. They have been growing cash flows faster than that. I want to be conservative. Good discount rate of 8%. They have an excellent balance sheet with cash at 11 billion and debt being less than 2 billion. When I take the present value of all the cash flows I expect from the company and I add cash and take away debt, I get to $135 billion of value. The current market cap, based on the stock price that they're trading at in after hours, it's going to be about 70 billion. So there's a big discount if you look at the cash flows of Airbnb. Earnings per share is a solid number. If I use a PE of 25 and a growth rate of 10%, which is conservative, I get a value per share of $127 compared to the price in after hours trading of $109.82, has a 16% discount. Overall, blended 66% discount. Now, Airbnb is growing. They're growing their revenues, they're growing their cash flows, they're growing their margins. Their balance sheet's really strong. All these things spell good company, good business. So it's a very attractive discount on a very good company. On many occasions, the stock market will not be pricing a stock equivalent to its value. And if you look at Airbnb 2 years ago, the stock was trading at $85 a share. And if you would have bought it then and held that stock, you'd be up 53%. And tomorrow is going to come down, but you'd still be up substantially. And the point I'm making is this is the same company. In fact, it's bigger. If you look at Airbnb over 2 years, they've pretty much have gone up 40 or 50% on their revenue line. And overall, the value of the company has been going up. At certain points, an investor would be up on the stock by almost 100%. We're seeing a big drop in this share price, but I would say it's a really good opportunity because the market, especially these days, is really selling off. We've been in about 2 weeks of really steep sell-offs, and I think tomorrow, which will be Wednesday, August 7th, there's going to be a pretty good sell-off of Airbnb. The earnings for Airbnb were really good. If you look at their revenue, their top line, it grew 11%. And as the company keeps getting bigger and bigger, in the quarter, they sold $2.75 billion of revenue. That's a very good growth rate. More impressively is their net income grew by 20%. So they're becoming more profitable. That's awesome. Adjusted EBITDA margin went up 33%. Phenomenal. Excellent. Free cash flow grew 41% if you look at trailing 12 months. So it's an expanding business on the top line. It's getting more profitable. It's generating more free cash flow. It's delivering. It's clicking. This business is very valuable. I really like the Airbnb business. They guided that the third quarter is going to be a good quarter. I don't think they're breaking records. This is not like they're doubling their business every year. They just have really good growth. And more importantly, very good profit expansion, very good growth in free cash flow. So I'm very happy with the earnings. Although the market does not like them because it wasn't a complete blowout, I think it was good earnings. So making a decision on Airbnb, whether to buy shares, hold, or sell, is quite easy. I look at the three main areas. First, the company, balance sheet, and then the discount. The business is excellent. I really like the business. It's a unique business that has very strong barriers of entry, and you can tell because of their profitability and their margins and their cash flow. If they had lots of competition, you would see depleting margins. You'd see cash flows being under threat. It's the opposite for Airbnb. They're expanding their cash flows. They keep getting more and more cash in the balance sheet to buy back shares, to invest in other businesses, to expand the experiences business. So overall, I really like the business. It's a new business in a new industry. It's a category that keeps expanding. So their marketplace keeps getting bigger and bigger. So all things company, A+. I really like it. Balance sheet's exceptional. They have not 10 times, but more like 5 times as much cash as they do debt. That's a great ratio. Their debt to EBITDA is almost zero. So overall, balance sheet's super strong. Discount at 66%. I'm a buyer all day long. I'm probably going to make a substantial buy tomorrow. And I'll continue to buy at these levels. I bought other companies that are exceptional companies like Meta, Google, Uber, under times like these where the market just doesn't get a company, discounts the stock price. And I gladly bought those shares. And I will gladly invest in Airbnb. I'm willing to bet my money that this stock's going to go up over time and the market will catch up and they will recognize that Airbnb is a very valuable company. So that's my video on Airbnb. Keep in mind, I'm just an investor. I'm not recommending you buy, hold, or sell Airbnb. Please make your decisions on your investments independent of this video. Thanks for watching. Good luck investing in 2024.